Happy Monday. It's time to get rid of your private mortgage insurance. It is the first Monday in June. Hopefully, you guys are having an amazing Monday. It is so beautiful out. June is actually my favorite month of the year. There's always something special about June. There's always some changes, whether it's changes in my personal life, professional life, in my investments. There's always some changes, and I love June. Hopefully, you guys are excited for June and the summer season. It's magical here in the Chicagoland area. Anyway, we're here every Monday going live, giving you some real estate tidbits and some advice on what's going on. Now, if you bought a property in the last few years and you paid less than 20%, typically that means you're paying private mortgage insurance, and it depends on your price point, but it adds quite a few bucks to your monthly payment. So if you bought in the last few years and you put under 20%, you really need to talk to your lender and get your property basically appraised again. Because typically, once you get the 20%, once you hit 20%, unless if it's not an FHA loan, keep this in mind. If you got an FHA loan, typically PMI is permanent. If you got any other loan other than an FHA loan, once you hit 20%, they can knock off that PMI on your loan, which is huge. It is a huge value to do. And the way the market has been the past few years and how fast properties have appreciated, usually it takes a few years to hit 20%. I would say more than a few years to hit 20%. But the way the market has been the past few years, if you bought a property 2 years ago, 3 years ago, 4 years ago, you're more likely at 20% at the very least right now. And because of that, you can save possibly hundreds of dollars per month knocking off the private mortgage insurance. So if you're wondering what you need to do, again, if you don't have an FHA loan, what you need to do, contact your loan provider. The person you bought your mortgage with, 99% of the time it's going to be someone different now. So don't reach out. Well, you can reach out to your original mortgage provider, but they're basically just going to refer you to who you're currently working with. So reach out to your current lender and ask them about what your options are, and ask them if you can get your property reevaluated to see that if you hit the 20% equity mark. And typically in this market, I wouldn't be surprised if you do, and you can save yourself a few $100 a month. So make sure to do that if you bought a property in the past few years and you used 5% down, 3% down, 10% down, whatever it is. Save yourself some money and ask your lender if they can knock off the PMI now. With how fast prices have been appreciating, it's more than likely that you can do that and you can save yourself some money every single month. So that's our tip this month for Chris's Corner. If you have any questions, shoot us a message. We'll be happy to answer anything. And if you have any questions on what you want us to talk about the next time we go live, send us a message and we'll be happy to address it and go live next time on Chris's Corner. Otherwise, have an amazing June. It's a beautiful day. Have an awesome week, and hopefully you guys enjoy the day.